as we navigate through some of the portfolios of our investors and our viewers. And viewers, it's time to move on and let's talk about portfolio planning, because there are a plethora of funds available in the market to invest your hard-earned money in. But how do you assess which is the right fund for your portfolio? What are the criteria that one should look at while deciding this? To help you navigate through this maze, we still have with us Amol Joshi. Also, viewers, do not forget to send us your portfolio queries on our WhatsApp number 865-797-4571. Remember, you can also email us your queries on themoneyshow@etnow.tv. Well, all right, Amol, let's kickstart all the queries that I'm going to be throwing your way now. And the first one is coming over email, and it's from our viewer Satish, who's from Bhopal. He says he's 65 years old and he has been investing 10,000 rupees per month through SIPs in the following funds for the past 1 year. And I'm going to read out his portfolio to you. It's Kotak Emerging Equity, Parak Parik Flexi Cap, HDFC Balanced Advantage Fund, SBI Contra, as well as SBI Dividend Yield, and Nippon India Small Cap, 10,000 rupees per month into all of these schemes. He's asking you, could you please estimate how much he can expect to receive at the end of 7 years, assuming a 12% annual return? Amol, what's your answer to that?
Sure. Satish, if you are listening to this conversation, first and foremost, right off the bat, I would like to say that for a 10,000 rupees SIP, you need not have 6 or 7 funds. Many times people do end up choosing, you start SIP of a lower amount, let's say 1,000, 2,000. And as you go ahead, you look at funds or schemes that have done well over a recent period, like 6 months, last 1 year or 2 years, and so. And you end up having multiple schemes in your portfolio. Mutual fund schemes themselves itself is a diversified instrument. An equity mutual fund can have anywhere between 30 stocks, 50 stocks, all the way to 100 stocks or more. So I would say that for 10,000 rupees SIP, you need not have 6 or 7 funds. You can consolidate, and I will tell you what I think what kind of consolidation you should do. But first, the portfolio. Your 10,000 rupee SIP, and as you have mentioned, assuming a CAGR or an annualized return of 12% over next 7 years, you'll be able to generate a corpus of 12.7 lakhs. So assume 12 to 13 lakh rupees of corpus can be generated. And coming to the kind of consolidation I'm recommending for you, do not have more than 2 to 3 schemes in your portfolio. You can have maybe from your given list of schemes, you can have 4,000 rupees worth of SIP into Parak Parik Flexi Cap, another 4,000 into Nippon India Small Cap Fund, and 3,000 rupees into HDFC Balanced Advantage Fund.
Thanks, Amol, for that answer. Let's move on and talk about the second query that we've got over email today, and that's from our viewer Karan. Now, he says that he wants to build a long-term portfolio for retirement and investment purposes with a monthly investment of anywhere between 40 and 50,000 rupees. Currently, he has active SIPs as follows. He has the Mirae Asset Large and Mid Cap Fund, where he puts 2,500 rupees a month, PGIM India Mid Cap Opportunities, where he's investing 10,000 rupees, HDFC Flexi Cap Fund, erstwhile which was HDFC Equity Fund, and he's putting 7,000 rupees over there as well, SBI Large and Mid Cap Fund, another 7,500 coming over there, SBI Small Cap Fund, 5,000 rupees allocated to that, Axis Small Cap Fund 10,000, and this brings the total to 42,000 rupees a month. Now, if he wants to increase his total SIP amount by 10,000 rupees, which fund should he increase, or should he add a new fund going ahead? Please guide him.
Right, Karan, so let me start off by saying that you are following a financial goal-based approach to your investments, and you are very, very clear in your requirement that this is your retirement portfolio. So it is always said, we always say that if you have a financial goal in your mind, and given that it is retirement, it is definitely several years or maybe a couple of decades away. If you have a financial goal, long-term financial goal in your mind, you will not be kind of disturbed. You are not prone to have knee-jerk reactions to near-term market movement. So that's something that is very, noteworthy, the way you have constructed your portfolio. That's number one. Karan, I would have liked if you told us or informed us what is your investment horizon, as in your retirement is 10 years away, 20 years away, or less or more. Since we do not have that data, we have worked out 2 kind of calculations for you. Your existing SIP is 42,000. You want to add 10,000 rupees more. So you will have a 52,000 rupees SIP going forward. If this portfolio over next 10 years generates 12% CAGR, since this is an all equity portfolio that you have shared with us, you will create a corpus of 1.16 crore rupees. That is after 10 years. And if you have a 20 years kind of a horizon, you at 12% CAGR, your end corpus or your retirement corpus will be 4.78 crore rupees. So that's a little bit about your financial goal and what kind of money that you'll accumulate. I also have an observation that since you have your long-term portfolio, retirement portfolio, I think that's probably the reason why you have large allocation to small cap, almost 36%. But I would suggest that your further increases, SIP increase or SIP top up in coming years, future years should go into, and you also have asked us a fund recommendation for your additional 10,000 rupees. You have one fund in FlexiCap bracket, that is HDFC FlexiCap fund. I'm going to recommend one more fund, that is Parag Parikh FlexiCap fund. With this fund, you will again have 6 to 7 kind of mutual fund schemes. Mostly 2 in each category: large and mid cap 2 funds, FlexiCap 2 funds, small cap 2 funds, and mid cap 1 fund. I would suggest during your regular annual portfolio review and annual portfolio rebalancing exercise, I would suggest to bring down the exposure from 7 schemes to 3 or 4 schemes, and let the annual review be the exercise via which you will be able to decide which schemes to retain and which schemes to let go of.
Perfect. Amol, thanks for that. Let's get in the next query, and that's coming in from our viewer Anil D. Mehta. He's asking, can he invest 50 lakh rupees in a balanced advantage fund with a systematic withdrawal plan and then use that SWP amount and invest that in an SIP? How does that seem to you?
Right. Mr. Anil, you're not the first person for whom we have answered this query. This typically sounds like an interesting strategy that you do SWP. Now, viewers, let's understand what is SWP. SWP is systematic withdrawal plan. So you are going to invest 50 lakh rupees into a balanced advantage fund. You are going to withdraw from that fund and do an SIP. Again, Mr. Anil, I would have liked if you gave us an idea of which funds do you have in mind, whether pure equity or SWP. You can also do, if you're closer to your financial goal, you can do SWP to get some cash flow out of your existing investments as well. So we are not sure what kind of scheme do you have in mind to do SIP into, but assuming that you have equity-oriented scheme in mind, I do not really suggest this approach. First and foremost, your money is already in market via balanced advantage funds. You are redeeming from there and going again into market. So that doesn't serve a lot of purpose. Of course, I understand that this is a balanced advantage fund, and from there, probably you want to participate into a higher risk or pure equity portfolio. But let's understand, within balanced advantage funds also, depending on what kind of strategy that mutual fund runs, balanced advantage fund can also have anywhere between 30% to equity % of equity exposure. Assume a 50-60% kind of equity exposure on an average. So if you do not want to participate into equity markets right away, you want to take staggered approach. By investing into balanced advantage fund, you will still end up participating 50, 60, 70% anyway into pure equity.
Right.
That's one. You also be mindful of the short-term and long-term capital gain tax that you will have to pay by this strategy. Last but not the least, exit load as well. Keeping all of this in mind, I do not recommend or suggest this strategy.
All right, Amol, some very valuable inputs coming from your way. We really appreciate you joining us on the show today and taking the time out to help us understand what debt mutual funds are and also navigating through our viewers' portfolio queries. Thanks so much for joining us. With that, we'll let you go. But viewers, I'm afraid we're completely timed out on this edition of The Money Show. Thanks so much for watching.
If you like this video, then like, share and subscribe to ET Now.